Welcome to Relax, We Got It. A limited liability partnership, LLP, is a legal entity that combines the features of a partnership and a limited liability company. It is a popular form of business organization that offers limited liability to its partners while also allowing them to actively participate in the management of the business. In an LLP, partners are not personally liable for the debts or obligations of the partnership. Instead, their liability is limited to their investment in the business. Characteristics of a limited liability partnership. 1. Separate legal entity. An LLP is a separate legal entity from its partners. It can own property, enter into contracts, sue and be sued, and carry out business activities in its own name. 2. Limited liability. The liability of each partner in an LLP is limited to the amount of their investment in the partnership. They are not personally liable for the debts or obligations of the partnership. 3. Management. Partners in an LLP have the right to manage the business directly. This allows them to actively participate in the day-to-day operations of the business. 4. Partnership agreement. An LLP must have a partnership agreement that outlines the rights and responsibilities of each partner, the management structure of the partnership, and the distribution of profits and losses. Advantages of a limited liability partnership. 1. Limited liability. The main advantage of an LLP is limited liability. This means that partners are not personally liable for the debts or obligations of the partnership. 2. Flexible management structure. An LLP has a flexible management structure that allows partners to actively participate in the management of the business. 3. Taxation. An LLP is taxed as a partnership, which means that the profits and losses are passed through to the partners and taxed at their individual tax rates. 4. Perpetual existence. An LLP has perpetual existence, which means that it can continue to exist even if one or more partners leave the partnership or pass away. Disadvantages of a limited liability partnership. 1. Cost. The cost of setting up an LLP can be higher than setting up a sole proprietorship or partnership. 2. Compliance. An LLP is subject to more compliance requirements than a sole proprietorship or partnership. For example, it must file an annual return and maintain proper accounting records. 3. Limited growth potential. An LLP may have limited growth potential compared to a limited company. It may be more difficult to raise capital or attract investors. 4. Personal liability for negligence. Partners in an LLP can be personally liable for their own negligence or wrongful acts. In conclusion, an LLP is a popular form of business organization that offers limited liability to its partners while also allowing them to actively participate in the management of the business. It has advantages such as limited liability, flexible management structure, taxation, and perpetual existence. However, it also has disadvantages such as cost, compliance, limited growth potential, and personal liability for negligence. Thank you for watching our video. Hope you liked it. Like, share and subscribe.